All right. Morning. Welcome to CPI Tuesday. Today I recommend we look at stocks, commodities like gold, oil, and Bitcoin. Dollar pairs, yen pairs, what do you stink? Smell like a plan? Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, guten Morgen. Richard's going to join the swing trading group. Yep. Sounds like a good plan to me. Hey, I got my crimson on. Huh? Shirt and shoes and rocking the white pants. And it's not even April yet. Bought a white watch to go with the outfit, and turns out the watch is broken. So I have to send it back to the jeweler. Boo! But I get that one, if you like your watches. Cool. Anywho, now what? What are we going to do today? Well, we got to let that CPI come out. Retail sales this week's also important. The algo's correct. Previous 6.4, 6 forecasted today. Great. So if it comes out 6 or 5.9, I guess everything's fixed. We avoided recession. Fed's got to pause. Goodbye. But I don't believe that, but that's what's being priced in right now. So we'll have to deal with that. We'll have to deal with it, see what's going on. Maybe we'll look at the FedWatch tool. I don't know. You tell me. You're the boss. I'm just a humble currency trader and macroeconomist. In the description below the video, there are links I'd like you to check out. There's a new link you may not have visited before. I don't even know if it's in this description. I'll put it here. I want you to check this out. Actually, you know what? I was going to send you to the main website, but I want to send you to a different link. Oh my God. What is that link? Is it this one? Yay! It is that one. Do you like my crank yankers? Yay. Anyways, hey, I'm about to launch my super secret fundamentally based alert service tomorrow. So I'll show you how 3 trading secrets that will 3x, that may 3x your profits without changing your indicators and while spending less time at your charts, and how to do all 3 for free. Tomorrow. So I want you to join today, right now. Even if you are already a subscriber to this thing we call Quant-Box, you should check it out. It's going to be fun, but informative as well. Okay? Cool. So let's do that. In the description below the video, there's also a link to my book. Would you please leave a review? I'd appreciate that. There's a link to FX Bootcamp, which is my community that I've been the leader of for approximately 17 years. 17 years, somewhere in there. Maybe, wait, longer than that. 18, maybe 19 years. Look, it's legit. What can I say? You probably have looked at a lot of different gurus in the world. Great. I've been trading longer than they've been alive. Okay. Yeah, it's true. I also used to have my own dealing desk at GFT when they were a big Forex broker in the United States. I did so much trading volume that the NFA contacted them and said, yo, You guys need special operating procedures just to clear Wayne's trades. And they had to have a full-time employee 24 hours a day. So they had to have multiple employees 24 hours a day and written procedures to clear my trades. That's probably more than your last guru. So whatever. Been doing this a while. FX Bootcamp is legit and I make it cheap. So don't look at it like, it's cheap, it's crap. No, it's $88 a year, and I swear to you, you're going to get at least 10 times the value. At least $888 worth of value. At least. Significantly more. Significantly more. So look, it's my contribution to society and my legacy. So that's why it's cheap. What is GFT? Yeah. GFT was actually good. Yeah, and the former CEO is now the head of a crypto project, which is pretty cool. Okay, so anyways, yeah, very cool, very cool. So join FX Bootcamp. What can I say? In fact, today is Tuesday, so all members. Day trading and swing trading members have access to the Stop, Look, and Correct session in which traders in our community get feedback on their trading and trading results. I like to call it a some-on-one mentorship. And then at 4 o'clock, that's at 2 o'clock, at 4 o'clock, the day trading group is getting with me. So today's a busy day. Tuesdays are busy days at FX Bootcamp because people end up spending like let's say they spend an hour and a half here at Forex.Today, then they spend an hour and a half in the Stop, Look, Correct session, then they spend another hour and a half with me again at 4 for the New York close. And, it's 5 or 6 hours in one day of just hardcore training. Is that right, Lucas? That's cool. That's interesting. So anyways, that's that. And then I want you to join tradersway.com. I want you to use them as a broker. I trust them. I respect them. They earn my loyalty and respect. So use that to just decide to go in and do your own due diligence. And just say, okay, Wayne recommends these guys. I should check them out. Open up a demo account, test the execution speed, look at the spreads, look at the swaps. They're all very, very, very good. But ultimately, they earned my loyalty and respect when the Swiss National Bank surprised the entire world by lying to the entire world and pulled the plug on their peg. And major brokers around the world went out of business because of that one catalyst in the price-time continuum. It was that big of a deal. It was an atomic bomb on the Forex market. And major brokers with tens of thousands, dozens of thousands of clients went out of business in one day. Traders Way, a little tiny boutique foreign exchange trading firm, was perfectly fine because they say they're an ECN and they are an ECN. And a true ECN would not be impacted at all by that situation. And others that claim to be non-dealing desks went out of business because, well, they must have had a dealing desk and they must have been trading against their clients. And they got caught holding the bag and they went out of business. Whoa! So tradersway.com right there showed me they had a real trustworthy business model. So anyways, tradersway.com. Check them out. Here's that link. You know what? Let me put this in the description. This is tomorrow, by the way. Like, you kind of have to do this now. How do I get into the description? Oh, there it is. Okay. You kind of have to do this now. I'll put the link now in the description. Macroeconomic Quant-in-a-Box. Box. Okay, anyway, so it's there. Cool. And I'll post it here just one more time. Boop. So one of the things you're going to see tomorrow is I'm going to teach you my first quantitative trading strategy, which I think was 2001. And you might say to me, Wayne, that's amazing. You were doing quantitative investing and trading back in 2001. I'm like, well, it's not actually that amazing because I didn't know what a moving average was. I didn't know what a stochastic oscillator was. Yeah. So I didn't use technical analysis. I turned to some buddies of mine that I think they had 300 million in their trading account, or their investment. They're wealth managers. They had about 300 million assets under management, and I asked them for advice, and they thought a couple of things. One, I asked about technical analysis, and they told me it was stupid. Only a loser would use technical analysis, is what I was told. And then I told them that I was trading Forex, and they laughed at me and said only a loser, only an idiot would be so stupid to trade Forex. And so that's, so you can imagine if that was the feedback I was getting. Of course, I didn't start with technical analysis. I started with what I thought was fundamental analysis, but it wasn't fundamental analysis at all. It was quantitative analysis. So I will show you. I literally recreated the spreadsheet. So I used to spend a minimum of an hour a day doing quantitative analysis before I even looked at a chart. That's why I did strategy first and then tactics. So I've been strategic and tactical as a Forex trader forever. And that's why it's the title of my book as well, which is now 10 years ago. 10 years ago, huh? 2000, more than 10 years ago. Damn, that's amazing. So anywho, I think you'll like it, even if you're already a paid subscriber. Lucas says, stay small, stay humble. Hadn't quite set in with him back then. Well, you're a big dude, so staying small might be difficult, but you seem like a humble guy as well, you know, so stay small. You're a big dude, but definitely humble. I don't see you as someone that's likely to be a crazy egomaniac, megalomaniac like me. I am small, but I'm not humble. You're big, but you're humble. We'd make a good trading team. All right. Anywho, dollar still weak on the short run. Yen coming off. Swissy still holding up. Interesting. Euro zippity zippity. Pound zippity zippity. Okay, so really, all this seems to me as, what would you say, sort of a mixed bag, knee-jerk reaction to market conditions. And yeah, I'm trying to stay out. I'm trying to stay strong enough to stay out of knee-jerk reactions. Although maybe we buy some bank stocks today, huh? So anywho, I don't know. Let's take a look at the stock markets around the world. Don't let me forget. What are we? 6 minutes away from? Yeah. Okay. From CPI. So don't let me forget. This was some pretty interesting price action yesterday, right? Remember this? This was our projected high for the month of March, and this was our projected low for the month of March. And we nailed it yesterday. Like, you see? Now, the plan existed before we knew anything about bank runs. But that's what we predicted. Quite literally, look to the upside, quite literally to the point, our top was 47.79. And the projected bottom was this 38.30 area. Okay, so it went down closer to 38.10. But it stopped, and it stopped quickly. And I just want to give like a whoop whoop out to our process. I think that's lovely, don't you think? Notice it came down, hit the daily conservative target, and popped right back up. So very interesting. The name of the game here now is what will we do at this 4-hour 21? But the food for thought is you're actually supposed to be out of your short. You can always re-enter, but it's early in the month. Typically, when you hit your target early in the month, you exit. So that's that. Take a look at FTSE. FTSE's not doing so good. Okay, but remember, we were bearish on this as well, weren't we? Oh, God. Little continuation there, right? Interesting. So that's all risk. That's risk off for sure. Going back to the Australian stock market, obviously representation of trading Asia. And check this out. Having the central pivot point be your top, S2 is your projected bottom. We nailed it, and it stopped. Again, you know, you could argue to the penny. Now you're like, well, Wayne, it went a couple of blips below. Well, it has to do that to cover the spread to take you out. So, like, it's amazingly accurate. Amazingly accurate. But once again, that says get out. I see Johnny's here. Hey, Johnny, what do you think of Australia buying up American submarines? How'd you like to be the dude that, like the salesman that sells submarines? Oh, she's a beaut. How deep does she go? that was supposed to be Australian. Terrible. How deep does it go, mate? Deep, real deep. Now, China says it's illegal because Australians don't have nuclear bombs, so you're not allowed to sell them nuclear submarines. I can see that argument. Hey, Isaac, Australia had a prime minister, I think, when was it, in the 1970s? He was at the beach, walked off the beach to do some swimming, and was eaten by sharks. Yeah. That was that. You're like, oh God, really? I was sitting on a beach on the other side of the Golden Gate Bridge on the Marin side. I can't think of that little town. It's quite a drive. You have to drive all the way down twisty, turny little roads, and you finally get down. Is it Stinson Beach? I think it's Stinson Beach. And I was sitting there, cold because it's July, and foam on a windy beach, and I'm just sitting there like the foam is blowing everywhere. It's kind of funny. You're sitting there, and then in the waves, I saw the fin of a great white shark, just like in the movies, just going by in the freezing cold water. Nobody in the water, of course. But you're like, wow. I remember sitting there like, it's just like the movie. And he's just swimming by with that fin sticking out. You're like, wow, dude, he was pretty close. Oh, yeah, we got the number? No, any second now. Let me bring it up from the... Let's get it. You'll... Give me the headline. And then let me move it back to, let's just go to euro dollar. Bump, 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 bump. $5.5. Ooh, whew. But 5.5 year over year. Wait. Is this one? I thought it was, am I wrong? I thought it was February coming out. Here we go. Yeah, there we go. CPI for all items drives 0.4. I guess we'll do PDF. All items up 6%, or still up for 6%. Remember, it's rising numbers. Even if it's rising at a slower rate, they're still going up. Rent was the largest contributor, and that will not fall, by the way. How do you get rents to fall? Well, I'll tell you what. If the landlord has to roll over the mortgage going from 3% to 6%, that doesn't really allow much wiggle room to lower rent if your costs are double, right? Ahmed says cheaper housing. Well, okay, in economics, we have something called the long run and the short run. In the long run, Ahmed, you can change the fixed variables. So like, how do you double production at a factory? Oh, build a second factory, right, Ahmed? Oh, just build a second factory. Well, you can't do it today. It might take 5 years. So that would be, in the long run, you would build a second factory and double production, okay? But in the short run, you can't do that. So so you can't just like, oh, well, just build a whole bunch of affordable housing. Well, that you just can't do that on the short run. That would take a decade. Oh, is that right? 303? Well, look, I just bring up the report. That's what I do. Anyways, anywho, on the short run, what you need to do is people need to lose their jobs and move out and move away. Then vacancies rise. So now apartment buildings are 30% empty because there's no work in town. So what does the landlord do in that case? Lower the price. Okay? But if you think of it from the landlord's point of view, if mortgages have doubled, and remember, commercial mortgage, even with a 30-year mortgage, has to be renewed every 5 years. I don't know if you know that. It's amortized as if it's a 30-year mortgage. However, the mortgage expires every 5 years. It matures, and you got to go back to the bank. And the bank says, okay, what is your average rent per square foot, let's say? Okay, what's the rent per square foot? What are your expenses? Okay, so you get your net operating, what do you call it? Net operating profit, net operating income. And then the next big thing you want to look at is debt service. Okay, but before you even get to that, then you have to place some sort of valuation on the property. Okay, let's say you need $1 million mortgage, and the property's got to be worth at least 1.2 million, let's say. But if it's only worth 1.1 because let's say the economy slowed down and you have less rents and you're lowering rents and you have more vacancy, which means less total, but costs the same to mow the lawn. And maybe pretty soon you're going to need a new roof. Well, you need a new roof, but you have less renters. So now what happens is the property's valuation is tied to its ability to earn income. So if it's now earning less income, now the property is not even worth 1.1. It might have been worth 1.1 based on the old numbers in a slowing economy. But not only is it a slowing economy, but your fixed expenses are the same, but your income is less. So now the apartment's worth less. So now let's say it comes in 1 million. It used to have a valuation of 1.2 million. So now they'll only give you $875,000 as a mortgage, and you need to roll the mortgage over. But then they say, but we can't give you a 3% mortgage. Okay? It's a 6% mortgage. So now, based on income levels and all that, and debt to equity, is it debt to equity or debt to income? I guess debt to income ratio would be off. So they're like, we can only give you 800,000 because all your money after expenses will go to paying down, servicing your debt to us. But if anything goes wrong, you'll instantly default. So we have a threshold. You have to have, let's say, 80% debt to income, not 100%. So now we'll only lend you 770,000, which means, the landlord, who you might consider evil because they own things, they're probably rich, so they must be evil. Okay? But you find out that they got to roll the property over and they have to come up with probably 300,000 in cash just to keep the same property. Because now they have less income, same fixed expenses, but now after your NOI, net operating income, then you have to do your debt service. So now it's your monthly mortgage, but your monthly mortgage is doubled. Meanwhile, your monthly rents are down by 30%. Okay. Yeah, I like Mill Valley. I used to know a couple of people there. I knew somebody in Mill Valley who used to build the data centers, not the machine side, but literally the buildings. And so I was at his house. He was going to invest into a project of mine, or not mine, a shared project. And he was going to be kind of the lead funder, the rich guy, right? The rich guy with deep pockets. So I remember, he must have been 10 years older than me, 15 years older than me at the time, I think. Like he wasn't that old. He was mature. So maybe he was in his mid 40s at the time. And so I go to his place in Mill Valley, and you're like, gee whiz, this is beautiful. So he's, kind of up and out a little bit. So you get to his home, and it's modern ranch, but modern, like Eichler kind of style. Views of a sort of a valley and a big hill, I think Mount Tamalpais. And he had a walk-in wine cellar with a wall of glass in his living room. So you walk over to the piano, grand. He had a, what do you call it? The grand piano, kind of, and behind that a wall of glass, and behind that all his wines and stuff. And I noticed on the wall he had a Picasso. I'm like, oh, nice Picasso. Yeah, a Picasso. I think it was in his hallway on the way to his office. You're like, nice. So Mill Valley. Yeah. I knew someone else there. I dated a girl about 3 dates. Her parents, that's how young I was, lived in Mill Valley. I lived in the city. I was working 20 hours a day in my startup and paying myself $2,000 a month, of which 1,000 of it just went to my rent. And but she was pretty, and I asked her out on a date, and she's like, yeah, cool. And on our first date, she was about an hour and a half late. I'm like, ugh, what kind of chick is this, huh? Hour and a half late for the Wainster? What are you talking about? And she shows up, and she's like, oh, I'm sorry, my dad bought me a BMW this morning. I'm like, oh my God. So I got this car. It took longer than we thought. I'm like, what? Your dad buys you BMWs? So anyways, I visited her parents' house to pick her up one time for our second date, and the whole house in Mill Valley was just like an art gallery with crazy amounts of art and no furniture. And yeah, you're just like, yeah, well, there's some rich people in Mill Valley. Tiburon is nice out that way too. Anyways, thank you for a little, right? The little walk through Marin County in the San Francisco Bay Area. I almost bought a houseboat in the Sausalito Marina. And it was kind of cool because it had a wood-burning fireplace. It was just a house on a barge. A little back deck balcony. I think it was even an A-frame. I think it was like a loft where you had to go up a ladder to get into your bed. Otherwise, it was a kitchen and a living room, and you'd open up these doors, and there was a little balcony for like two chairs and a little table, but you're like 6 feet off the water in this little marina in Sausalito. I'm like, nice. Now you'd call it a tiny house. It's probably worth 10 times more. All right. Less food and energy, up 0.5%, which is a lot, So look, up, right? You see, this is actually increasing. What do we want to focus on? Hey, Todd. Thank you for that. But why? Thank you. That'll go into the red wine fund. But maybe Todd's the Todd's the guy I met back in the 90s. He's like, that's me. I build data centers, and I said nice things about you. Wouldn't that be funny, telling a story about somebody? They're right there. Are you? Yeah. Anyways, thank you, Todd. Grind says, how do you get people to use a new money system, no national currencies, instead of having one planetary currency? Okay, Grind. All right, Alchemy, Mr. Alchemy. That actually makes no sense and would be horrible for humanity. If you think of a dystopian future in which we all work for a giant corporation that rules all of humanity globally, there's like one giant company, or maybe acting as a government, or maybe it's one giant government. And we all live in a future and everything is gray and dark, and we all wear Hillary Clinton jumpsuits. You remember that? Oh, she made such a... She listened... I kind of feel bad for Hillary because I think she's actually not a nutcase, but she listened to too many people and didn't stand her ground on things that were important to her. But wearing the jumpsuit, I think, ruined it for her. But anyways, if we all, look like Chairman Mao, dress like the old Communist Party of China, and that's the global system of organization, it's really a doomful situation. Now, the reason I bring that up, Grind, is you want national currencies because you want a difference. You want the foreign exchange. You want a reason to say capital will go to the least developed, best potential sources of return. And it needs to be shown through currency valuation. Another way of saying it is there should be a reason for rich countries to invest into poor countries. If there was no reason, if there was no upside, it would turn into kind of like Cuba, where you see all these beautiful homes that are in disrepair, and you ask a local, why don't you fix it up? It's a beautiful home, but it's falling apart. Why don't you fix it up? And they're like, A, we don't have any money. B, if we had the money, you couldn't get the supplies. And then C, if you could get the supplies and the money, and you fix the place up, you wouldn't be able to sell it for a profit. You're not even allowed. There would be no return on investment. You'd be guaranteed loss. So nobody will do it. Well, you end up with a system like that if there isn't differences in currency valuation, okay? So you want the ability to have a return on investment. So when you invest into the United States, you get this maturity. It's a mature economy. There's already lots of roads and bridges and airports and all that kind of stuff. We have a lot of factories. We have a lot of technology. And it's hard to get Google to be twice as productive. You know what I mean? Like Google, a company like Google is incredibly productive. So to get it to be 1% more productive you'd need an amazing increase in capital and technology and labor. Because really it's physical capital, it's buildings and machines, right? And then human capital, which is entrepreneurialism as well as skill level. So to get Google 1% more productive would require almost 30 or 40% more human capital or physical capital, right? Like it'd be very difficult. But if you go to Ghana and invest into Ghana, who would have lots of human capital, but not to the alpha, and not much physical capital, well, you can easily make it more productive. You'd start with building better factories, building better infrastructure. So, right? Better roads, like just start with basics. Like let's build better roads to and from the airport and seaports or, whatever. So that, and then you need a better, ways to bring things in. So again, airports and seaports, and then you want the roads from those places into the capital. You want to rebuild, not just those roads, and then the infrastructure to support all this new business. Of course, you want to also start building institutions like a central bank that actually does central banking, governments that are not corrupt, court systems that are fair and just to all. Well, all of this is capital, and all of it increases productivity. And it's easier to go into an unproductive place and increase the productivity. And we call this catch-up growth. So you can grow these economies super fast. So you can get 12% growth in a place like Ghana. Okay? But United States, dude, for the last 50 years, it's only been growing at 2.2%. Okay? But China used to be growing at 20%, then 15%, then 10%, and then 9%, then 7%. Now they're trying to get to 5%. What happened? Is it falling apart? No. The world has heavily invested into China and has an amazing levels of sophistication and infrastructure way beyond the United States. And it's very difficult to get it to be more productive. So again, you would, looking at Ghana, you would probably start with capital. Okay. You just adding capital, like building roads and bridges, would be very productive. And they already have a lot of labor. So they have tons of labor and it's cheap. Cool. So build a bunch of basic factories. Make t-shirts in Ghana kind of thing, right? So you start adding capital, but it's really low level. And then what you do a little bit later is you educate the labor force to do more sophisticated things. So instead of making t-shirts, time goes by, infrastructure gets better and better and better and better. So therefore you can take the profits from that and educate the labor force, labor, and they become smarter, more skilled, and more entrepreneurial. And then what you do is you can increase the capital by building more. Instead of t-shirts, you're building laptops. You see? And meanwhile, productivity goes up and up and up. We call this the factors of production. Okay, the factors of production. So as you invest here and then invest here, you can invest more here, which means you can invest more here. And the factors of production keep going up, which means another way of measuring productivity is GDP. Okay. So if money was the same, this wouldn't work out, Grind. There wouldn't be a reason, because ultimately what would happen is employees in Ghana earn the same wage as employees in the United States. So why would you invest there? And what actually happens is the wages in Ghana don't go up. The wages in the United States would go down. So that's why I put it as a dystopian future, that take a look at, China in the 1950s. and it was the entire world was under the thumb, the rule of Chairman Mao and the Socialist Communist Party. Imagine that was one government running the entire world. Do you think that Chairman Mao would treat the Americans better than the Chinese? Do you think Chairman Mao would treat the Ghanese better than the Chinese? No, you would see it wouldn't be any better, but it could be worse. So no, you want differences, and the productivity of each economy is reflected in the value of the current currency. So now, why is it that some countries suddenly have outrageous levels of inflation? It's not purchasing power. Why do some countries have outrageous levels of inflation? Okay, because you'll have a poor country. So let's say that's a rich country. Okay, amazing technology and amazingly and highly educated workforce. Okay, then you have another country that just has some capital. Why don't we do it this way? I'll do little k. Okay, they have a little bit of technology, but they have a huge labor force. And neither of them are alpha. Because, okay, Mohammed nailed it. Cash Insomnia says because they have to use US dollars. No, that doesn't make it happen. Because the dollar's high. No. Because of US debt. No. Now, that might be linked to it, but it's not the root cause. Mohammed has it is because if K gets to the point where there's almost no capital, there's no infrastructure, so you have the tiniest of K, and you have a bajillion people. So think of like Mogadishu in the 90s. Okay. People, thousands of people literally starving to death. Right? Like there's nothing, there's no infrastructure. The roads are practically gravel through the city. And huge levels of population, right? Now, maybe that's not a good example because I don't know their inflation level. But what ends up happening is the government decides to pay for debt or pay for things through not debt, not productivity, but by printing money. It's the same way the United States. Okay, the same way the United States created inflation. The government borrowed money and gave it to people for free. Zero productivity. And it's negligence. Now, it shows that there's a problem. So, yes, we went into a pandemic. And yes, unemployment soared to 10% because of a global pandemic. That's an exogenous shock. That was very, very serious. The government needed to step in and do something. But the interesting thing is, Americans didn't have any money in the bank. So there could be this level of Americans are dead broke. And that's probably the problem. You're like, oh my God, right? The economy is going to be shut down. Well, there's a rule of thumb. You're supposed to have 3 months of all your expenses, you're supposed to have 3 months in cash. So, and then you're supposed to have, let's say if you're 50 or 60, you're supposed to have millions of dollars in the bank account preparing for retirement. So if you get into a pandemic where everything shuts down for 3 or 4 months, that's a bitch. But you should be able to survive it. The thing is, Americans can't. Or at least many Americans can't. And so the government borrowed money and gave that money away for free because, well, people didn't have any money. So the government gave people money, gave people with no money, money. But then they're like, that's not fair. So they gave people with money, money. Which is really bizarre because now they only want to tax people. I mean, it's strange, right? Again, let me back up here. When COVID hit, the government sent out $5 trillion in stimulus checks. They said it wasn't fair to only give poor people money, so they gave rich people money too. Very, very strange. But now when it's time to pay it back, they said, well, it wouldn't be fair to tax poor people, so we're only going to tax rich people. But the rich people didn't ask for the money. And they're willing to give it back. So, I mean, it's strange, but I guess it makes sense. I mean, it makes sense. I mean, I guess wealthy societies should say, we'll take care of people that needed the money. But it's just weird for the government to, like, I don't know, contradict itself almost. So I'm not here to get into that. But my point was, there's only one way to create inflation. Only one way. And you can judge any economy with high inflation. And you could say, oh, I know what happened here. Okay? They've created money somehow. You can print money at the Treasury, literally printing the dollar bills. Okay? Or you can borrow the money. So it's like a credit card. Imagine you have no money in the bank, but you have a brand new credit card with a $20,000 credit limit. So you can go out and buy TVs and buy brand new clothes, put gas in the car, all goes on the credit card. It seems like something's happening, right? That's the only way to create inflation. Those two ways. You print or you borrow money. So if you print money, there's no increase in productivity. Okay? Do you know what dilution is? This is what happened to Silicon Valley Bank. Let's say on Thursday of last week, Silicon Valley Bank was worth $200 a share. Okay? The next day it was only worth $100 a share. Okay? One reason this occurred is Silicon Valley Bank on Thursday told the world that they're short on cash. Let's say there was 1 million shares available already outstanding. So you have to look at the total shares in the market. Silicon Valley Bank said they're going to issue more shares. So let's say they add 1 million more shares. So these are shares, the stock that did not exist before. They literally just print pieces of paper and sell them to people, with the idea that they're going to raise billions of dollars to then get their balance sheet back in balance. But if nothing happened, guess what? If you had 1 million shares worth $200 each and you print another 1 million shares, now they're only worth $100 each. dilution. Okay? It's the same valuation. You see that? 2 million shares worth $100 each. Okay? It's 200 million. But 1 million shares at $200 each is also 200 million. It's the per share. So it's like the dollar. Okay? If there's a number of dollars and you add, okay, you add to those dollars and nothing has changed, like no increase of capital, no increase of labor, no return on investment. All you did is say, there's X number of dollars, we're going to add more dollars. Just add them. How'd you get them? Well, we just created them, just like this, printing little pieces of paper and selling them to people. Well, if nobody buys them, the only thing that happened was the value per piece of paper went down. And nobody bought them. So what if the government decides to either borrow money from somebody and say, okay, we're going to put that in the stock of cash, or nobody will lend them money, which is even worse. And this is what will happen to an economy that has 1,000% investment. Nobody will lend them money because they're not worth it. So instead, they just print it. But the stock of cash goes up, so each dollar now is worth less, which is what? Inflation. Right? Because the amount of cash that you have, see, you get money because you go to your filthy, stinking job. Okay? You go to work every day to make other people rich, whether it's the CEO or the shareholders. But you go to work every day to make somebody rich. And they pay you a pittance for it. And then what? You decide to go to Supercuts and get your hair cut. Now you transfer some of that money to them. And the Supercuts lady, she's depressed, so she hangs out at the bar at Applebee's and spends some money. Okay? And now the bartender pays his rent. Now the landlord has some money. And now the landlord pays his BMW lease. You notice it's just the same dollar going around. We call that velocity, by the way. Now, what do you do with all the money you don't spend? So obviously you don't spend all your money at Applebee's. And the Applebee's person, or at Supercuts, and the Supercuts, they don't spend all their money at Applebee's. And Applebee's bartender doesn't spend all the money on rent. What do you do with the rest of your money that's left over? M2 is just basically cash. Okay, but yes. Okay, so yes, that's M2. We can label that M1 and M2. Okay, it's probably closer to M1, but M1 and M2, this is just checking. That's fine. So what do you do with the excess? You have a choice. You save it or you invest it. In fact, savings is equal to investment. Why? Assuming you're in a rich country. If you're in a poor country, this tells you why your country is poor. So we'll get to that. And this is where I get hate mail. Don't hate me. I'm a lover. I'm a lover. I got nothing but love for you. Okay. Savings. Let's say you go to a bank. And you give your money to Silicon Valley Bank. Silicon Valley Bank then bought 10-year treasuries. Okay? They pay you 1% for your deposit, and they put 3% in their pocket. Because you don't know how to do it yourself. So you give them free money to invest. In fact, they take 75% of the profit for themselves because you don't know anything about money. And this is why bankers laugh at you all day, chewing on a cigar. Hey, play the game, bro. Play the game. Be your own banker. Or you decide to be your own banker, and what do? You decide to invest it yourself. So you buy the 10-year T-note. And you earn 4% because you were smart. Okay, now this is what a rich country does. Notice that there's productivity tied to this money that you're not using. Now, a retail bank would also do what? They would have less notes. What would a typical retail bank do instead of buying 10-year T-notes? Okay? Loans. Thank you. Okay? For businesses and for mortgages. Okay? Which is actually paying them 5% or higher. So here's the thing. In a rich country like the United States, there are many people that don't know anything about money, but they have excess income. The excess income, they just leave in the bank. And it gets, because excess income is unproductive. So what happens is you save it and it gets turned into an investment which has a return on investment, an ROI. You see? It's productive. And so people that have unproductive money put it in the bank, and the banking system puts it to use for projects that are productive. Businesses that are growing and expanding. Okay, houses that are going up in value. Or you can invest it yourself, put it in the stock market, put it in the bond market, put it in Forex. Okay? but it's money that's being productive. Now, a poor country doesn't trust their banking system. So they don't put it into a bank. And a poor country probably has very few investment opportunities in their country. Why? Well, it's not productive. So you have to change the equation here. In a poor country, savings is not equal to investment. Savings remains under your bed. Okay? And is not, there's no return on investment. You don't loan it to your neighbors so they can fix up their house and increase their property value. You're not lending it to the business down the street that wants to hire more employees and needs a bigger space. No. In fact, you don't have companies that are expanding. You don't have companies that are hiring. You don't have property values going up. And it's because you have some money like this, but no increase, no return on investment. And then you have this other thing where, if you remember the solo growth model, while all this is happening, savings is not equal to investment, but the little bit that you have is suffering from something we call depreciation. Depreciation. Sorry for my French. Okay. Depreciation, which means at some point, the little bit of stuff you actually have in your poor country starts falling apart. The roads that you built are wearing down. The bridges are rusting. Okay. The houses are falling apart and people don't really have any money to fix up their homes. Well, what does the government do? The government has to do something, at least for the government stuff. So they either print money or borrow money with no return on investment, and they increase the stock. Okay, money stocks, so money, okay? This is the value, and this is the quantity. Okay? So we'll do a supply curve here, supply 1. Okay? And then we'll do a demand curve in orange. Demand is fixed, so we'll do D star. Okay, and now the government doesn't have any money and they need to fix up the airport or just pay themselves and steal it. I don't know. But the government decides to print money or borrow money. So before they make that decision, okay, money is worth V1, the value of money at this quantity of money. Remember, actually, I'm going to change this because it's not a normal supply and demand curve. So you actually write this one in a different way because we're talking about money now. Because quantity of money is fixed, isn't it? It doesn't really have anything to do with demand. If there's $1 billion bills, then there's $1 billion bills. So actually, supply is vertical. Very unusual. But for that amount, for that quantity of money, that's the value per dollar. So now if you shift the quantity, increasing quantity, okay, to supply 2, what happens now is now there's more money, Q1 to Q2, you can see an increase. So you can label it like This is 1 billion, 2 billion, 3 billion, 4 billion, 5 billion, 6 billion, 7 billion. So the supply went from 4 billion to 6 billion. What happened to the value of each individual unit of account? V2. So what a government should do is find a way to be a catalyst, actually help society want to be productive. I wrote a paper on restructuring the entire social infrastructure. One of the things I wanted the government to do is educate and create entrepreneurs, people that are self-efficient, self-reliable, and create a culture and institution that supports entrepreneurs. Now, I wrote this paper at a time when it was illegal for an Uber driver to stop at an airport because the government was protecting taxi cabs and medallions. And I'm like, Uber's great. What are you talking about? There are people that want to drive for Uber, but also most people think taxis suck. And in fact, it's old world. Like, you don't know who your driver is going to be. You don't know what the kind of car you're going to get, and it probably is nasty and dirty and stinks. You don't, like, if you don't know who the driver is, if you're a woman and being driven home at night, you're like, dude, who is this guy? Like, and nobody knows where I am. And like, what if this guy kills me or rapes me or something, right? Like, just dumps me in a ditch. Like, nobody would know. Okay? And then what about cash? Like, oh my God, I don't have cash. I just landed at the airport. I don't have cash. Oh, the taxi doesn't take credit cards. And then you get in and you're like, you don't know how much is it going to be. Is it going to be $30 to get home or $50? I don't know. The guy, you know, like, it was such a bad model, and the government was protecting the medallion owners instead of saying, look, this is an entrepreneurial idea. It uses the internet. It'll do credit card. It'll do tracking. It's safer for people. But the best thing about it is someone that wants to have a part-time job, let's say a single mother that has really crazy schedule and time constraints, really needs a flexible job. And you're like, this is a cool thing. It would really benefit women in particular. Like, liberating. Or if you want to do a side hustle, you're like, you have a 9 to 5, but you want to make some extra money. You're like, oh, I Uber on Saturday nights because instead of going out drinking, I'll make some money. It's more productive. And you're like, great. So imagine you had a society that instead protects and encourages entrepreneurialism, inspires entrepreneurialism. What does that do? That's labor to the alpha. Yeah, boy. And now you got entrepreneurs that say, hey, because I'm an Uber driver and I'm making extra money, I'm going to buy a nicer car, get a car lease. It only costs me $800 a month, but I'm making $1,500 a month doing Uber. But I can get a nicer vehicle and I can do the Uber premium. Okay? And you're like, so I'll end up making $2,000 a month. And you're like, great, this is awesome. And so now what? Now people get to drive a nicer car. You make more money per hour. The car lease, the finance company is making money. The car company is making money. And GDP is going up across the board. And people are happier. Okay? That's the difference between sort of rich country, poor country. Oh, right on, Grind. Appreciate that. Says when I get some money. I owe you a cigar case and a cigar and a favorite bottle. Nice, man. Cool. Well, let's do some charts, huh? Okay, so I'm watching a double top on this one. Watching the Lucas bands rise, actually. Huh? You see this one? Yeah. Now, I'm kind of just staying away right now. But that's a pretty standard operating procedure type trade. If you're doing price action. If you don't know price action, join FX Bootcamp. $88, you will learn. Can I check Bitcoin? Yes. But you have to pay me some Shiba Inu. I'm trying to get to 1 billion. Okay. Aussie dollar up on my line. Okay, great. Again, just kind of wait my turn. Kitty cat coming down. I think it was last night in the day trading group where I highlighted this number. I was on my laptop smoking a Hoya. Got cold. Got cold out there. It was cold after that. It was so cold I had to take a bubble bath. No joke. How sad, right? Yep, how sad. Okay, you see? So this might be buying opportunity for me today. I got my eyes on that prize. You still have retail sales. So that's going on. Let's look at commodities now. And Bitcoin just topped out. We're done. We're done. Okay. I said, we're done. It's over. And then you come in and you're like, but what if it? And I say, shut your filthy mouth. Don't you talk to me that way, boy. No, there is no what if. That's out. Just like this is out, that's out. You're out. You're done. Ish kaput ya. We're done. That's called a full Monty. It's very rare. Will it go to 27,000? Now, whatever. Who cares? You're at 2650. Now you want to know if 27. Dude, highest risk pips you could possibly get. You're supposed to be out. Okay, you'd have to be a knucklehead to buy it now. So the only way you can get to 27 is if you take this across and buy it again at 25. And then it goes to 27. But will that happen today? I don't know, bro. You do you. But to buy it now, it's just funny, actually. It's just funny. You do you. Yeah, very risky to buy it now. My oh my WTI is quite something. Let me get off the daily and bust this down. Holy smokes. So yesterday we had a central pivot to M1, but if you're going to take it, if you're going to follow this through, the target is actually $71.20. Well, we hit the M1. We had this huge pullback. This is actually the 4-hour moving averages. I'm on a 1 hour, but trust me, that's actually the 4-hour short. And now we're all the way back, and we just, we got this, and the next target is 70. So you could do an Arctic turtle where it goes like this, where you stretch from the weekly, hit the monthly, and then everybody's out. But oh God, that is quite a drop. We were just at 81. Okay. And we had talked about this heading all the way back. And even though that makes sense to me, it's still radical. It's still crazy. Like, those are such crazy moves. Okay. So the next move is, the chart says 71 based on, okay, there's the support and resistance of price. Okay. And that number is 71. And 70 is the support and resistance of market. Now, why is it slightly different? Because the support and resistance of market is a weight. It's weighted. So it's this step down. I'll do it in this color. The step down from this line to this line suggests additional bearishness in this market. So therefore, we go from support here to support here. Okay? And that support, this one here, the ones with the X's, it's calculating with this and this in mind, and this in mind calculated this and this in mind. And so this is all sort of continuation. The 72 to 70 area is highly supportive. So if you're only selling now, you're negligently late. Okay? Okay, so this worries me a lot. And then this is a worrisome level. So what I think it might do is, let's say another big up, and then we head down, and then it spikes through, and then we spike back up. And we go from 70 all the way back to like 78, 79, that kind of stuff. Yeah. But it's just, the thing is, right, the charts themselves make that assumption inconclusive. So like, or maybe a little more down, but I'm just like, but I don't really know. And that's where it gets trickier. Okay, the chart itself is inconclusive. Okay, because it's like looking at this. We knew this area here was resistance, so you shouldn't be looking to buy up there. You should be looking to sell. Well, in reverse order, this isn't a place to look to sell. Okay, it's a place to look to buy. And now maybe it breaks here, but you know what? You can still get a big move back up before it comes back around. Yeah. Now that could work out. We are in demand destruction mode. And the stock market, I think, should still fall. I'm very close to buying a bunch of stuff. I don't want to buy too much, but I've been watching a bunch of things. And I'm nearing on several of the things I'm watching are on 52-week lows. Like, we're very close now to 52-week lows on a bunch of things, in which I think is an opportunity to buy, like, especially if I'm going to hold it for 10 years, right? Okay. Oh yeah, that's right, Meta. Right? We did this in swing trading. Yeah. But notice the top is R1, so this is our projected bottom, right? I mean, that's the thing that gets me. So let's just do basics here. This number predicts this number. $72.30 is our projection. From $80.80. So I'm being as precise as possible. From 80.80 to 72.30. That's what is projected based on technical analysis. And we've nailed both like literally to the penny. Sorry, 80-90, I guess. Or no, this one's 80-80. Yeah, this one's 80-80. So, dude, like, I could argue the money in this is gone. And, you know, the probabilities are gone. So now it might fall, it might rise. I would say rising based on technical analysis is more likely. But we know there's a weighted average, so a weighted mean. So there could be a breakout coming to the downside. So yeah, but support, resistance, done. Maybe we can get this a little lower. Yeah, maybe. Yeah, Jim says I might be buying banks. Maybe. It might even be too late. I'd have to look at the stock market. It's open now. Yeah. Yeah, one of my ideas for a side project, something for me to do the next 20 years, I was thinking about starting a charitable fund for investing, for alternative investing, but be able to do it in such a way where either I make no money or a little bit of money for managing it. I don't know what's allowed. It wouldn't be the focus of it, but for essentially baby boomers that need income during retirement, or for those that are young and want sort of can take a sort of a high yield approach, right? I was thinking of like a high yield income producing retirement account portfolio. And just think of it as a carry trade. Right? Where you own an asset like a currency. So you make investments where you're buying US dollar, and the US dollar over time will go up, it'll go down, it'll go up, it'll go down. Okay, great. So that's part one. Part two is if you own US dollar, you're earning about 5% a year. So it'd be interesting. My vision, I actually had a dream. I don't know if it was a dream or my meditation. Sometimes I mix them up. I think it was a meditation. I saw myself writing people checks every quarter. I saw myself in my office where I had a stack of checks that I'm mailing to clients. And it was this money. So we collect this, and let's say I collect it, and every quarter I send you money. And meanwhile, we just sit on the pool of investments. Now, it would be Forex, spot, Forex structured products, stock dividends, and writing options against the stock portfolio, earning income. What do you think of that? And I thought it would be cool to make it long-term only investing, and in particular for clients. So I would like say it has to be part of a retirement account. But wouldn't it be cool? I just thought it'd be cool. I'm writing checks. Here you go. I want to just send people checks. And you're like, Wayne, why don't you just do direct deposit? No, I want to do checks. I want to write the checks. I want to physically, right? And my goal, I thought, would be in a bad year, do 10%, and in a good year, do 20%. So on the long run, these companies will go up in value, just like real estate goes up and down in value. But on the long run, your property should go up in value. So we'd have those good year. The good years are going to be the years when the stock market rallies. Great, fine, because we're earning income. Let's say 10% a year, 10% a year, 10% a year, every year, 10%. But in good years when the stock market's rallying, the stocks go up 20% plus our 10% income. So we're closer to 30%. But in a bad year, the stock portfolio drops. But remember, if you don't sell it, it doesn't hurt you. So now you don't get any asset appreciation, but you collect your 10%. 10%. 10%. So I actually have that dream. I got it in the back of my brain. I can't get rid of it. But I don't know. It's one of those things. I don't know. I've been bitten by it. I don't know why I keep thinking about it. Give it time, it will pass. Yeah, maybe, Highlander. That just sounds like something that should be done. Anyways, my WTI. That's that. Taking a look at gold. I'm short up in the sell zone, held up by an hourly 21, but this may breach and we head down to the 55. I don't know, Meta. The issue I have with that, Meta says, do you think the U.S. government will start filling the SPR? The issue with that is Americans don't have the right type of oil. So Americans have to blend their oil. And the type of oil Americans are producing right now is too light. And you can't put it in the SPR. It just doesn't work. Okay? So they would have to import the oil. Either buy it like the appropriate stuff. So let's say Saudi Arabia probably has the right kind of oil. So you just buy it from Saudi Arabia and fill it. Okay? Or you buy oil from Canada and then you take some of your American oil, mix it with the Canadian oil. It's called blending, but you have to do it at a refinery. And well, that takes time and takes money. So you take your $65 oil, but by the time you go through that process and blend it, it's $72 oil. And then you bury it in a cave. So I don't know if you guys know this. The Strategic Petroleum Reserve are just caves. Mines, actually. But anyways, interesting, right? Yeah, but Meta, the issue is when do they do it? And you're like, if oil drops to 65. Oh, okay. But not necessarily. And of course, with what money? With, let's say, the government goes to the budget office and says, we want $100 billion to buy oil for the SPR. And they're like, well, we gave you $100 billion and you gave it to the Ukrainians. Oh, yeah. Well, we want another $100 billion. They're like, dude, well, we don't have any money. You're just going to have to go out and borrow from somebody. And that's how we got inflation in the first place. Okay. Yeah, Highlander, I'm still, your comment there, give it some time, it'll pass. Well, I don't like it when things do that, right? So I was thinking that I would just build my own model portfolio and just show it. Here it is. I would do it like a hedge fund, right? I might show you let's say 150 companies that I'm invested in and probably like the percentages of it, and then explain some of the other things like Forex carry trades and covered calls, writing covered calls against the portfolio, which is essentially just throwing down limit orders. So you profitably get out of a stock trade. I mean, you end up making money. So you lose the asset, but then your cash goes up. So the problem with that is you have to go out and find something new to buy, which is a bit of a problem. But it'd be interesting just to manage the account. That's why I thought I'd make it charitable. Like, I'll just manage it. I'll just show you. Look, I'm making on bad years 10%, on good years 30%, and every quarter there's income. I'll just show you. Okay. So I'm thinking if you had $100,000 in it, every 3 months you get a check for, $2,000. If you have $1 million, every 3 months you get a check for $20,000. But that, you should have $1 million, and you could probably live on $80,000 a year. And that's in perpetuity. That's the part I like. It's like managing money for an endowment. And I thought, you know what? That's cool. That's cool. Imagine you're getting paid $80,000 a year and you're not selling any of your stock. You still have $1 million in stock in your portfolio. You see what I'm getting at? I'm like, I want to have that kind of positive influence on society. God knows there's probably 1 million wealth advisors out in the industry that don't do jack. And hedge funds are only available to rich people. Why? Why shouldn't, I think there should be hedge fund type strategies available to everybody. But anyways, that's me. All right, so anyways, there's gold. That's fine. It's doing all right. It's all right, as they say in Australia. Oh, it's all right. Bitcoin at the top, already showed that. Take a look at exotics. It typically would do well with a weak dollar, and then peso wasn't doing that great. I have 2 peso trades now that are profitable. I'll move this one to break even. And yeah, what the heck? I'll move this one to break even. What the heck? And let me move some of this out. Old plan. take a better look at this. Let's go out to the 4H. See, so I'm short on resistance. Yeah. So I have to, this target should go to back to the bottom. Yeah. And this target should go to the bottom. Oops. No, then this target needs to go to the bottom. Lovely. I can't lose money. I'm the greatest trader in the world. Ooh, the rootinest, tootinest Forex trader in the whole world. Cool. Okay, nice. Brian says, what's your thought of Fed action after today's 25 basis points? Okay. Meta says Biden could borrow from China. The thing is, China is lending or buying less treasuries, significantly less treasuries. And so is OPEC. So OPEC countries like Saudi Arabia and China are buying significantly less American debt. They are loaning us less and less money. Okay? The world is changing. Saudi Arabia, I don't know if this has been confirmed or not, but is suspected of killing a journalist about 10 years ago. And Americans were very upset by this. It's not very democratic. Well, guess what, bro? Saudi Arabia is different. Okay? But anyways, we say this goes against our morals and beliefs. Like America has to apply this to Saudi Arabia. Okay, but whatever. Well, now, when Russia attacked the Ukraine, they cut the Russians off from American dollars, shutting down their central bank, shutting down their entire banking system. But then, if that was to add insult to injury, they also took non-government officials, right, Russians, billionaires, and said, well, we're going to punish Russia by taking this guy's yacht, taking this guy's business, taking this guy's bank account. We're going to freeze these assets all over the world. And now Saudi Arabia is thinking, well, shit. If we do something that America doesn't like, they don't like our government, they don't like our environmental policies, they don't like the way we treat women, who knows what America will just wake up one day and not like, but then they'll take our yachts. And they'll take the billions of dollars we have in the American bank system and billions of dollars worth of money invested into the stock market and trillions of dollars invested into the bond market. They'll just take it all. They'll take our apartments in New York City, our mansions in Los Angeles. They'll just take them all because they just decided to. Maybe we'll stop investing. What would you do if that could happen to you, where the government just says, hey, it's not you. We don't like your government, but you're a billionaire and you were born in that country. I know you live in the United States. I know all your properties here. I know your bank accounts are here. I know your stock investments are here. But you were born in a country who currently has a leader with a policy we don't like, so we're going to take all your shit. Wouldn't that be scary? So you're like, you know what? I don't want to be I don't want my money here if someone could just take it because they don't like me. That'd be pretty scary, wouldn't it? Like, seriously. So China is investing significantly less. And OPEC is investing significantly less into the U.S. economy. I don't blame them, really. I understand it. But what happens is that means the dollar isn't a reserve currency anymore if you can't exchange it. All right, so we had DAX. Sure, DAX, pretty straightforward here. Okay. And this is where you were supposed to exit your short positions. And you might be able to get a new one here, but it's likely to go higher. So, Family Time, are you a member of FX Bootcamp? China's buying farmland all over the world, for sure. They're also buying lithium. They're buying copper. Yeah. But see, that's what I was thinking of doing is in my basic human needs fund to buy farmland. It would be part of it for sure. Yeah, David, what that means is sort of like not quite significant weakness. Okay. Family Time, are you around? Family Time's gone. Yeah, so my basic human needs would be investing into iron ore, coal, copper, lithium, cobalt, clean water, farmland, farm productivity, so farm technology, that kind of stuff. Not environmental. Yes, it's clean air, you would argue, is a basic human need or right, but food, water, and energy, and material would be basic human needs. To eat, to have enough food to eat, have enough clean water to drink, have power to watch Baywatch on your tiny little television. Yes, uranium for energy. Yes, that would be part of it. And I'm about to buy Glencore, not Glencore. Oh, you are. So the rules of engagement is that we are here. Okay, we hit this target on the 13th. So you expect to go all the way back here. Okay, there you go. That's what's in the training course. All right. So yes, uranium. What is the name of that company? So there's a company that is involved. I don't think they produce. They might produce. Yeah, they do produce uranium. But I'm not really interested in that because uranium is found all over the world. So to me, it's commoditized. So I don't really care about, you can get uranium anywhere. So then the next thing is, so you got the stuff, the actual stuff. But then you have to convert and enrich this material so that it can produce energy in a nuclear power plant. So it's raw stuff out of the ground. That would be the miner. And then it needs to become fuel. So why don't I put it that way? It's not energy. That's sort of like, we'll just say fuel for nuclear power plants. So I spent some time researching and thinking about where in that supply chain I want to invest. I even thought about, well, what about General Electric that builds the nuclear power plants? I'm like, no, I'm not really interested. And then what about investing into different types of nuclear power plants where they're modular or not, all that? No, I don't want to get involved with that. Because you got to remember, I used to be a venture capitalist, so I used to look at that kind of stuff. Not energy, but I mean like there's a new idea, like there's a new future for something. And then there's a million different versions of how that can take place. What's the likelihood I can pick the 1 or 2 or 3 out of a million based on that one new technology? Like the importance of the internet. Well, for every one company that Amazon, Apple, Google, eBay, these old legacy companies, there's 1,000 dead companies you've never heard of. Okay? Amazon.com was an online bookstore that had no books on Forex. Okay. Anywho. So anyways, I don't want to bet on the technology. I don't want to build the technology. Okay, great. I don't want to put my money there. But I don't want to dig this stuff out of the dirt either. And then there's a company in Canada that also is in like step 3 of the process. So there's this process, then there's this process, and then I believe it's in here. Okay, step 2, we'll call it step 2. 1, 2, 3. And there's this process where you take partially refined. So let's say you take the stuff, you take the uranium and you get rid of the dirt and all that kind of stuff. So you're refining at a very rough level. So let's say you can just melt it down or something and you skim all the dirt and the other material off and you're left with just now uranium. Okay, that's step 1. Well, that's not that big of a deal. There's places all around the world that can do that. Step 2, there's in the United States, there was 2 companies. I can't think of the first one. Johnny remembers it. Johnny, if you're still around, what's the name of the company I'm thinking about in Cigar Lake, Saskatchewan? But this company does step 2 as well as some of the other stuff. But they do step 2. The other company, this is a Canadian company. And then there's an American company called Westinghouse that's been around 100 years. And this Canadian company now owns their business for step 2. Okay? And the step 2, if I remember correctly, is now you take, let's say, the cleaned up uranium. You get rid of all the nonsense. So now it's just pure uranium, but not refined. And the first step in the refining process is to gasify this stuff. So I guess you put it in a crucible and you liquefy it and then you turn that into a gas and it gets refined more. Okay, so you're not kind of like washing, you're not just washing away the dirt and the non-uranium material. So now you gasify the stuff, and anything that's, and gassing something's kind of cool because, the gasified uranium would go to a certain level and then get siphoned off, where the dirtier stuff would get siphoned off the bottom, the lighter stuff would go off the top. And using physics and chemistry, you know exactly where the pure uranium is. So imagine then you capture the gas that's pure uranium, and then you cool it back down, back into a liquid, and then the liquid back into physical powder. And now you have step 3, where you can then take, let's say, larger piles of the purified uranium now and refine it additionally by, let's say, compressing more and more and more and more uranium into a smaller kind of thing, if you will, so that it's highly, unnaturally potent uranium that could be used for energy. And what I'm getting at is, if I was running my basic human needs portfolio, I would buy this company because in North America, it's the only one that can do step number 2. I know, right? That's what we say in Boston, wicked smart. So to me, that would be something that eventually goes into energy, and that would be a basic human need. In particular, it ends up being clean energy. Let me try Cigar Lake, Saskatchewan. Boom, boom, boom. Cameco. There it is. Cameco. Okay, so you're going to invest into these guys. Cigar Lake is the world's highest grade uranium mine and is located in northern Saskatchewan. So I'm from Saskatchewan. They have a jet boring technique specifically for the challenging deposit. Okay, it's a small company, 600 people. See how beautiful? This is so funny. I see this picture, and that's where I'm from. Like, literally not that picture, but that's how I remember Saskatchewan. Okay. Yeah, that's how I remember it. I've been to weddings in buildings like this. Yeah, the metal siding and everything is just wow. And the snow, yeah. It's cool, man. Look at the boring. 480 meters below the surface. I kind of want to go there, man. Wonder if it's bad for you. Cameco developed an innovative jet boring technique. Boy, that must sound awesome when you fire that sucker up, huh? Saskatchewan's nice in the summer. I can't help but laugh. I look at that picture and I'm like, I bet you he's wearing a thong. Yeah. Yeah, it would be fun to check out a place like that. Yeah. Oh, they got some operations, uranium projects, fuel services. Give me fuel, give me fire, give me that which I desire. Learn how uranium is mined, milled, and processed. So I'm not talking about, so it's mined. Step 1 then is milled. And then there's processing, how uranium is turned into fuel. Yeah, I want to do that one. How do we get to that? How do you get to part 2? Courtesy of... All right, I want to watch this.
Acid dissolves the uranium, but not the rest of the rock. It settles to the bottom of these tanks. The uranium acid solution flows forward, leaving the unwanted minerals behind. Using a series of chemical reactions, they further purify the uranium. Then they roast it at 850 degrees Celsius. This concentrates it into a jet black powder. The uranium powder flows into 210-liter steel drums. A worker taps the lip of the drum to remove residual powder. He then puts the lid on and activates a press that secures it tightly to the drum. As an extra precaution, he seals it with a steel ring. He labels it to indicate the drum's contents, weight, and radioactivity. They stack the drums in a warehouse to await shipment to the next processing plant. There, the uranium goes from black to yellow as they convert it to uranium trioxide, an interim chemical form in the processing chain. They ship the uranium trioxide in specially designed inverted cones. Upon arrival at the next facility, a valve opens at the bottom and the powder flows into conveyor tubes that take it into the plant. Inside, they dissolve the uranium trioxide powder in acid. A worker takes a sample to test the density and the chemistry and confirms that both are acceptable. Then they add a chemical to turn the dissolved uranium back into a solid. After more processing, the uranium trioxide becomes uranium dioxide, the chemical form required for nuclear fuel. Spinning the uranium dioxide mixes the different-sized particles to make it a more homogeneous blend.
So they take out the oxygen. Interesting.
The chemical processing has also caused the uranium to change color again. It's now a fine black powder. Using several tons of pressure, tools shape the uranium dioxide into pellets. A revolving wheel with protrusions guides the pellets into a channel conveyor. The conveyor takes the pellets into a furnace. Over 24 hours, the heat removes pores in the pellets. The pellets shrink, increasing the density of the uranium. The particles fuse together and harden into a ceramic. Here is a pellet before and after baking. A robot arm now loads the pellets onto a tray and levels them. A conveyor moves the tray forward. Ahead, another robot places zirconium fuel tubes on a rack. Zirconium is a metal that's highly resistant to both heat and corrosion, but neutrons will pass freely through it during the fission reaction. The rack of tubes meets up with the tray of incoming pellets. A robotic loader pushes the stack of 30 pellets into the tube. Another robot delivers the rods one at a time to an automated welder that caps the ends. The next robot retrieves the completed uranium fuel rod and transfers it to an assembly fixture.
Did you know fuel rods look like barbecue grills?
It arranges a total of 37 rods in an upright position within the fixture. After the rods have been welded and the bundle capped at both ends, a robot transfers it to a scale. This weigh-in confirms that there is the correct amount of uranium in the bundle. Prior to burnup in a reactor, the amount of radioactivity emitted by nuclear fuel bundles is very low, and they're safe to handle as workers prepare them for shipping. They're now on their way to the power plant, where they'll be sure to generate a reaction.
So not much radioactiveness. There's a lot of people that say, well, what do you do with the spent rods? And the answer is, well, you put it in a special container and then you bury it. And they're like, well, in 50,000 years, it'll still be radioactive. And that is true. But what level of radioactiveness? Because remember, there's a half-life. And the level is less than a granite stone. So there are people like stopping projects like this, like you can't have nuclear energy because of the nuclear waste is going to be radioactive 50,000 years from now. Yeah, well, in 50 years, it's safe to hold in your hand. So anyways, yeah, so whatever. Basic human needs. What kind of economy would we have? What kind of global productivity would we have if there's no energy? Well, the consequence of that is then you'll have to ask a farmer who uses diesel fuel to power his tractor and his trucks. Well, he'll have to do it by horse and buggy again. Productivity will fall. There would be a shortage of food. Probably 3 billion people would starve to death. Then what? Disease would go rampant. You couldn't bury people fast enough. You'd run out of land. And disease would spread, and the other 2 billion will die. And then productivity will fall even more because we'll be down to 1 billion people. Life will be reset. Now, the interesting thing is, I think this has happened multiple times in humanity. I think it would likely happen sometime in the future, and it's no big deal. I think humanity is probably reset a few times. Maybe an asteroid has hit Earth, blackened the skies, 80% of humans die, and with the death of 80% of humanity, the engineers are dead, the teachers are dead. We forget how to build things, and we just kind of restart. You can imagine the Romans were in England for hundreds of years, but by the time the Vikings showed up, which is, let's just say, 800 years after the Roman Empire fell, the Vikings showed up in England, and the idea that the Romans were there had been forgotten. Through the Dark Ages, that was forgotten. So who built all the giant things that the Romans built? Like a wall from one side of the island to the other? Who builds a wall hundreds of miles? Well, clearly a race of giants. Right? So anyways, interesting. So energy is important. So I'll leave it at that. CPI, interesting. Retail sales is going to be interesting. Then we got a Fed meeting. That'll be interesting. Darko says that we had human colonies on other galaxies. Yeah, I don't know about that, but I guess anything's possible. But, you know, like I've heard theories that, I think common knowledge or science right now says if you look at Egypt, you have the pyramids, but before the big ones at Giza, there are smaller pyramids and in other parts of Egypt that are older. And then the oldest ones are failed pyramids where they're not perfect 45-degree angles or whatever the angle is. In fact, they're like steps, and some of them have collapsed a little bit because they were learning how to build pyramids. And it took many, many, many generations to figure out how to build a pyramid. And then the grandest ones are the giant ones at Giza that we all know. Now, some theorists, and I probably got this on Joe Rogan or something, so I don't know the level, but this idea that, no, it's actually backwards, in which the pyramids that we know are very, 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 very sophisticated. And the way that we do our time sample dating, carbon dating and stuff, is actually not quite accurate. We're not doing the right technique on these things. But in fact, what it was an advanced society built the pyramids thousands of years before we think, and that there was a big die-off of humanity, and it took maybe another 1,000 years for humans to come back, and the whole time people that lived in that part of the world are looking at these pyramids like, how the hell did we build these things? So they get back after maybe 1,000 years to a level of technology, trying to figure this out, and they start practicing building smaller step pyramids and all that, and they fail, and it takes them a while, but they were trying to redo something that is much older. So instead of the pyramids being like 3,000 years old, they're 8,000 years old, and it's just, we've lost all that timeline, and it's, you know, and we still don't know how they built them. And then you go to like Machu Picchu and you're like, we don't know how they built that. Right? Yeah. Yeah, and there's some interesting things in there, Darko, for sure. I've heard when you go inside the pyramids that there's you can feel an energy. But whatever, I don't need to get into all that. I haven't been there, so I don't know. I'm just trying to turn, you know, a nickel into 15 cents. So I'm just a humble foreign exchange trader trying to make his way through life. With that being said, remember at 2 p.m. Eastern Time, we have our Stop, Look, and Correct session. And then at 4 p.m., we have our day trading session. So if you're a member of FX Bootcamp and upgraded to the live account, live trading groups, very, very busy day today. Lots to look at and discuss. The exiles, it's the reapers. Every 50,000 years they return to harvest the advanced civilizations. Nice. So hey, another interesting day. Lots of news. Nothing fundamentally has changed. So I'm not trying to freak out. Just trying to do my thing day in and day out. And I hope you appreciate that I've been here every day for nearly 20 years, every single day. Just trying to show up, do what needs to get done. So, peace on earth. May the pips be with you. May our profits be above average. Oh, wait. Don't go yet. Sign up for the presentation. Let me bring that link up again. Sign up for the presentation tomorrow. It's a big deal. It's a big deal, I'm telling you. It's going to be a fun presentation, but it's going to be a very helpful presentation. It's going to be a very honest presentation. Okay? And then I'm going to leave you with a choice. But I will show you how to do everything for free. And I promise you, it's legit. So please sign up. I want you to sign up. Even if you're already a paid subscriber, you're like, I already own it, Wayne. No, I still want you to show up because I want to show you the impact and the power and the opportunity that you have in your hands. Okay? I'm worried that you might be a young Luke Skywalker. And you're like, oh, look at this. I got a lightsaber. Cool. Dude, whoa. But you actually have the Force inside you. Revelation said what? You said the 88 bucks included what? What? $88 gets you 88 hours of video training. Nothing else. It's pretty good for 88 bucks. In fact, it's ridiculous. All right, I guess I'll leave you to that. Leave you to it. All right. No more questions? Yeah, it's a good deal, dude. Peace on earth, may the pips be with you, may your profits be above average.